Hello and welcome back. It's Monday, which means Jean-François of Owczarczak of MJT is back in the studio with us to discuss some of your favourite pairs. Jean-François, thank you very much for coming in.
Thank you for having me, Natalie.
Now, it's a very data-heavy week this week, affecting mainly the dollar pairs. So we're going to take a look at that shortly, but let's take a peek at gold and have a recap on some of your comments over the last couple of weeks.
Okay, great. Well, let's go into the Dukascopy directory, as usual, with the live streaming prices provided by Dukascopy. And let's go to gold, and let's start with the investors view. Okay, so last week we were having a look at gold and saying that the longer term weekly chart had broken very important levels, and that opened the door to much lower levels over the next quarters. On the daily chart, we had seen this strong sell-off, and we're slowly getting into exaggeration levels, both with our envelopes touching each other, our risk index being in the green, and our initial targets having been completed. Now, our hourly chart was in a correction up, and if I remember right, the corrective targets were around 1437. The fact that we made it above last week initiated an impulsive target calculation, and what we're going to look at today is are these really possible, and have a bit of a monitoring of this move. Now, if we go back to the daily, as we can see here, we had a very strong exaggeration and the correction up, which we mentioned at the time, and which is slowly getting towards the upper boundary of our smaller envelope. It's not a strong signal statistically, but it could provide some resistance here. Now, if we go back to the hourlies, so we made it above the corrective targets around here, and now we calculate impulsive targets, which could bring us back almost to the levels which were the ones before the sell-off occurred. For the time being, we're pretty much in the middle of the range, and the oscillator is climbing smoothly. So if we just take the hourly here, there's not too many reasons to doubt that this move is not possible. Now, if we focus back out and go on to the trader's view. So what we could see about the trader's view is that the 60-minute chart is slowly getting into fully priced areas, and this in a bull trend. The 15-minute chart is still in a bull trend, and there's probably a bit more to go here. And the 4-minute chart is also in a bull trend. There's a bit more to go also. Now, I just want to focus on the 60 minutes here. Well, we're in the red on our risk indicator. We're slowly getting to a point where the two envelopes could touch each other, and we're very well priced in terms of targets. Usually, if we had to calculate a corrective target down, and going through that corrective target down to invalidate this uptrend, a good rule of thumb is to take the lower end of a larger envelope. So that's around 1420. So as long as we're above these 1420, you would probably see a continuation of this uptrend on the 60-minute, which would justify a continuation of the uptrend on the hourly chart.
So we're seeing a rebound there continuing?
For the time being, and as long as we stay above 1420, yes.
So that's our look at gold for the day. Now, we have already mentioned dollar pairs have got a lot of items impacting them this week. So let's take a look at our dollar pairs there. So
let's go into the dollar pairs. Let's go into the hourly and the mosaic. So what we see here is a mixed picture, as Australian dollar in a downtrend, euro in a correction down, the pound's been very strong, and New Zealand is pretty much in the middle. So let's focus on the euro to start with.
So with this pair, we've got the ECB rate decision, we've got the Federal Reserves, we've got NFP Friday, a lot of different material coming out there. What are the charts showing?
Okay, so if we have a look here, the weekly is still in a downtrend, as with the daily. And so we are in a negative dynamic, where we could, the targets are still very aggressive on the weekly here. Just want to reiterate that the 120 is crucial, and that our very low targets here would really be confirmed if we can make it below the 120 mark. Now, on the daily, let's have a closer look at the chart. The top that was made in end of January, early February here did have a lot of exaggeration, and the risk index and the envelopes touching each other. Since then, we've been moving down. The trend is still down, and the targets still point to the lower 120 levels. What we could see here is that the rebound has created a new situation of stress, where the smaller envelope is touching the larger envelope. However, this is a descending envelope, so these usually have quite a lot of impact. And we're slowly getting into the red zone again on the risk index. So although these targets do sound aggressive, it is quite a risky situation. Now, if we look at the hourly, what we really would want to see here to confirm the downtrend is that we can make it back under the 129.51 level, which is the corrective targets down, which were initiated about in the corrective down move that we've been seeing over the last 2 weeks. For the time being, the euro is quite strong and it's trying to buck this trend. And so let's have a look at the trader's view to see what would need to be triggered in order to forget this correction down and position ourselves in an uptrend. So zoom out, go on to the trader's view. And on the trader's view, if you can see here, the 60 minutes is slowly making its way up from an oversold situation here, from a lot of stress on our envelopes. And if we look at it in detail, we're in a correction up. We would be in an impulsive move up if we could make it through the 131.11 level. So these are very important levels to watch for us, because they would confirm that we're going impulsive up on the 60 minutes and would probably invalidate the correction down here. Now, if we look at other pairs, go back to the mosaic and look at the pound.
Take a peek at the cable. What, in your mind, is going to be the item this week that impacts this pair the most?
Well, basically, for us, it started off from a rebound, which we could see here in the middle of March. The trend is still down. The envelopes are still pointing down. It was quite a nice oversold situation. Now, this rebound is, in terms of pricing, is slowly coming to a quite fully priced situation. Now, the hourlies are in a bull. They're moving up. However, you see stress on the envelopes, you see our risk index fall in the red, and you've seen that our targets have been achieved. So in this respect, it would be quite a nice a risk situation to call for a downtrend of the daily. Now let's try to have a look at the levels which could be triggered here, which would confirm such a reversal. Well, for the time being, we're still moving up on the 60 minutes, still moving up on the 15 minutes, and on a slight consolidation, although it's not holding very well. So there's a resume uptrend already here on the 4 minutes. But what we could see here is that slowly, also on the 60 minute and on the 15 minutes, it's getting quite well priced, and that we're slowly, both our envelopes are touching themselves here, also here, and that we're slowly in the risk index here. Now, as a rule of thumb, I use the same one, the lower end of a larger envelope, which is a good rule of thumb for moving on an impulsive move in the other direction. And so it's in the low 153, in the high, sorry, 153 levels. So as long as we stay above here, we're pretty much still in this upward correction that we can see here on the hourlies of the cable, although it's getting quite expensive.
And finishing up our discussion today, we're going to take a look at the dollar against the Swiss francs. Let's see what's happening there. So let's go back to the mosaic. Dollar Swiss is over here. And we're back on an investor's view. Now, it's a bit of the mirror image of the euro, but not quite. I mean, Euro Swiss has had quite a few moves over the last months. Now, if we look here, the weeklies, well, they're still in an uptrend, and they're trying to achieve an impulsive move that could reach into the 110 levels. Well, we're not there yet, but that would be the target of this uptrend if it manages to accelerate. Now, if we look at the daily, well, the trigger point here is around the 0.9595 level, so the 0.96 level. We made an attempt up here last week, a failed attempt for now. So for the time being, we'd really need to see the dollar moving back above here to confirm medium to long-term uptrend. Now,
if we look at the hourly charts, well, for the time being, we haven't reversed the trend yet, but at least it's been dented quite a bit. And similar targets here, I mean, around the 0.96 level on an impulsive move. Not quite at stress here, a bit of stress here. It really matters if we could hold here on a trader's view in an uptrend. So let's have a look at the trader's view. And the trader's view, well, consolidating down on the 60-minute, impulsive move down on the 15-minute, and impulsive move down on the 4 minutes. Let's go at it in reverse. Pretty much reached the targets on the 4 minutes. Pretty much reaching the targets on the 15 minutes. And on the 60 minutes, well, basically we have to hold above 193.53. If not, we'd move in an impulsive move down, and the whole move up, or the whole attempt up that we can see here on the hourly would be jeopardized. So it's going to be a crucial week for most of our pairs.
Jean-François, thank you very much for your insight into these pairs. Thank you very much. For more information on other data releases which could impact currency markets this week, check out our Week Ahead interview. For now though, goodbye.